What's up? What's up? What's up? What's up? What's up? Close this. Change this. Alrighty, people. What's up? Guess who's back? Back again. Guess who's back? Guess who's back? Guess who's back? Da 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 da. Give me a second, people. Give me a second. Testing, testing. One, two, three. Testing, people. Testing. Um. All right, people. So this is my new uh this is my new display thanks to the homie Harris. Thank you, sir. This wasn't possible if it wasn't without you. Shout out to Harris. Um Hopefully you guys like this. Um no more no more holding my phone on the screen. You can actually see the whole thing now. First of all, I just want to show you the indicator I use. I use the auto fade retracement. I use that one a lot to point out the 50 Fibonacci. 50 Fibonacci. Let me show you what that is. 50 Fibonacci is right here. Pretty much the way this works is you read from the top to the bottom. It gives you 50%. Once the market drops, or it has, whether it be up or down, but one the move has been made, you then pay attention to 50. Once the market heads to that price or to that range 50 underneath it, especially when there's data coming out or whatnot, it tells you that there's a breakout coming through and the market's going to rally. Anything that bounces above 50 tends to tell you that we're going to start rallying. So, especially if you know where the higher time frames 50 Fibonacci prices is going to be at, or point is going to be at, then as the market starts breaking down and you have them all set, you could then see like, okay, if there's some sort of black swan or some sort of bad news, my 50 Fibonacci for the monthly, daily, 12-hour candle, I can see where they're at across the area, and then I can see, okay, if this happens, I can use them as a area where I know the market's gonna either retrace or blast off depending on what's happening. Kind of like, let me show you. Kind of like right here. Oh, I can't do it right now, so actually, you can try with this one. Yeah, from right, you know. We actually, the one that's happening right, this one right here. The move was from the bottom to top, and that's how it shows you this was your 50% area. This right here. So notice that as this comes down, if it ever does come down, this is gonna be your bouncing area. We're either gonna create some sort of head and shoulders in here, and then start going down, testing these regions. It's gonna be a crucial area where we create support, and then start going back up again. Um, but that's if the market would have done that. Not saying that the market's gonna do that, but that's how Fibonacci's are used, or how I use them. I don't really focus on any of the other ones. I just pay attention to the 50 of every time frame. Um, Besides that, the other indicator that I use is the algo. This one, you guys, I got a long time ago, 4 years ago, from a private when ChatGPT first came out, so you can't really get this anywhere. I was able to pretty much able to read it my own way. Um, there's actually two 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 new things that I added to it. Not added to it, but I it was part of it. I just never used it, which were these right here. I'm assuming that's some sort of EMA 10, 20, 50 bullshit or whatnot. And I never really used them till today when I was fucking around with it. I was like, this whole time I could have used these EMAs to indicate to me where the bottom, for example, right here, especially with all my bullshit that I have on it. it would have given me more confirmation. So it's another thing that I'm gonna start focusing on reading this. Um, this indicator also tells you on each time frame if we do have some sort of black swan, where your deepest area will be at for a cushion for a stop. For example, right here, as long as we stay in this cushion and it's thick, it tells you we have a lot of chance to maintain it and break through it and continue on pushing on up. That's all it means. As long as we maintain above this cushion, we're still bullish. Again, every time frame has their own. So if I knew, like for say for example, we're falling here in this time frame, I would have gone down maybe to my weekly to tell me there was a low area or if there was a some sort of resistance above it that I can't really see. And again, along with all my bullshit and trend lines, it would have told me and also what data is coming out. So this is another indicator that I use, and that's it. So let me talk about the market. The Nasdaq was showing me couple actually last month, beginning last month. So let's go to the monthly. I noticed that let me take my indicator off. That in October, and this is why I like when the market has these a pull, a push and a pull, especially in a bigger time frame, because normally you can't really catch them. Normally, how they see how they all close above or whatnot. So the fact that we were at a new price range, it was easy. I don't really gotta worry about all this in the way, and if it's a perfect three candle box like right here, see new price range, fell back, box it up, and then you wait for it to close inside or breaks below it, and here's another one, and so on. So here's another one at the bottom. But when they're new area, new price range, they're easy to spot. Don't worry about other resistance or support around it, like all these around. Anyways, so the first one is gonna give you the resistance. Since we're in the monthly, I mean every one of them it works the same, but just when it's going down, it's opposite. You know, when it's going down, it'll be a support. So the bottom one creates your support, second one creates your resistance, and you box it up and wait for the third one. So same shit, just works differently. So first one gives you your resistance because we're going up. Second one you support, you box it up, and then I was telling the homie, hey look, we're forming a three candle box, and it's gonna be October, November, and December. Since I see how November closed and we had a pullback and we closed on a red, that means that December is gonna be a fake out. Especially the week that I was talking to him, I told him, look, 2 weeks from look at the place that they have set up. You have CPI this day, you got so and so, you got the Fed talking on the 10th, this is that. And I bet you, even though the market gets pulled the first 2 weeks, or sometime in the middle, he's gonna say something, the market is gonna do a fake out and pull back, and that's what it's doing right now. So even though October did this crazy drop, that didn't matter to me. What mattered is how the first 2 weeks of December reacted, especially because the second week was going to be your Fed decision. And now it's going to be like, but then when you were looking at the market in the weekly, you could see that they were really trying to shake you off. Because, so if you look how they play with you or with us, so right here, see the market this way. Where's this shit at? How fast this shit goes? Let me see. All right, so right here, the market was at an all-time high, right? All of a sudden, we get a pullback, and that was another fucking whole black swan, another whole fucking fear bullshit that they always fucking do. I forgot what that was, but I knew the market was gonna recover like it always fucking does. It doesn't didn't make sense because it was either some sort of uh, yeah, some bullshit. Anyways, so again, we recover. We're coming to an new all-time highs. The market gets that fucking good news. Good news by good news I mean bad news because we all want to hear bad news pretty much. So the Fed could keep cutting interest rates. Otherwise, if we don't get those bad labor markets, we don't get those rate cuts, and the markets tend to retrace on down because and so on. So it's either bad labor market, and we keep and we keep going to recession, or we cut interest rate also to keep that fear from going overboard or whatnot and to balance it. So at the end of the fucking day, I said, look, we're coming to October, the end of October. It was October 27, I believe, or 23 on Thursday. And then Friday came October 24th. I was like, look, they're gonna open the government this week probably, especially if Trump mentions, though, they mention, hey, we're gonna work because for the third week, people were worried that, hey, the third week they haven't opened the government yet. People were giving them bullshit. Um, After that, it was your Thursday. One of the six things we were working on. So like I was saying, so the Fed, yeah, they were in the second week, third week. I think it was the third week. Let me see. Yeah, that was the third week. So by the third week, that's when they mentioned it, and they mentioned it the last day of the week of the third week. That hey, I think we're finally gonna end up opening the government. I want to talk with these guys. The market reacted positive to it, and of course they opened up the government again. But I was telling the homie again, like, hey, we have a whole month of data that didn't come out. If every week we easily get one or two, maybe sometimes three bad data and big heavy bad data, not light, just some light data, big heavy data, then they're not gonna throw it all at once because the market would panic and they would drop like crazy. So what they're gonna do is they're gonna sprinkle it, and since they know what these files have in them and how the market's gonna react to it, and therefore pretty much the banks move the market, the hedge funds move the market, so they know what's going on. We're the dumb ones, but they're gonna sprinkle it at certain days before the Fed, after the Fed, so they have some sort of leverage or some sort of something to hey with this data right here we can drop it and then the next data is gonna be good, so we're gonna bring it up, and we're gonna move the market and then to take it to make it feel like the market is feeling this way, shaking off that data and just focusing on this one right here. And that's what those rumors is gonna spread now through all your finance agencies or whatnot broadcasting. Um, Even though we have bad news with so and so, we did have good news with so and so, so the market's now shifting, focusing on this. It's blah 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 blah, and the narrative goes in that direction, and the market follows, or the retail follows. Um, and then that's when we start getting the bad news. Think data comes up on Tuesday, I mean on Thursday, and it was bad data. And then from there on, we just continue on a downfall. That's what the market. Notice how when this normally happens is that we cover the gap, the market comes down, cover the gap. And here again a daily candle with three candle bumps. So this was the market right here knows or feels like, hey, we closed the gap. So now this big data is coming out this day is gonna complete three candle bumps and have a reversal. Not that they see that, but that's what as traders me, I would be taking this in like, yo, it's a we get saved or we fucking keep on going down. And again, they mind fucking because you're seeing this as a trader, investor, however it is, you're thinking, oh, we're gonna recover again. But it was too easy. So as the market started playing and having these downfalls, then you start hearing the whole is the AI bubble over, is this it, or whatnot. And I told the homie, no, this is not it. We're gonna recover. We're gonna recover. And in one fucking week, we end up recovering what we just had in the last 3 days of November. After the mark, after that, the sentiment is back on from the Fed not talking, or the Fed not cutting interest rates from a 30% chance to a 85% in a matter of just in a fucking week, over a week, just in a fucking week. So as investors start thinking about that, the market starts, having that whole hurry again. Also, we have the Fed is going to be talking pretty soon in a couple of days. So now the whole sentiment or the whole view is, all right, cool, you guys, we had the data that we wanted. That should pressure the Fed to cut interest rates. Now we can, and then the Fed's going to say we're going to cut 25 points, and the market should rally going up from here. We should center rally, not a fucking bullshit. The Fed talks, and we have that little rally. But guess what? Oracle, the next fucking day, I think it was Oracle and Broadcom. AI companies came out earnings, bad earnings. Another fucking black swan. I was like, look, they're just using this shit just to bring the market again because too easy. Investors, retailers, and you have YouTubers now. You have YouTubers, you have all these motherfuckers now doing the whole we're coming to a sanctuary shit or whatnot. It's um but at the same time you having this whole is this it for the market panicking because you're seeing these bad numbers or whatnot, especially because Oracle. So the whole fear again is back again. So it went from 30 to 80 right now to this is it. Earnings came out with Oracle. Is this it's the bubble popping, all these signs, all that fucking bullshit, all that fucking fear. But then right here, the homie pointed out, there's a M candle, M pattern formation right here, and the ton only you're right. So what this means right here, this is the foundation here. This is the foundation, and we have a push, a pullback, a push, and the way these patterns form is that this is your support area right here. And you can see right here. And you can see right here with the candles. And if you go higher, you can see them more sharp in this region. So the fact that the way it's gonna play out is that we're gonna go down here, and I mentioned on my videos. No, I was doing testing videos, so I didn't. They were recorded. Or maybe they're about. I doubt it. And I told the homie, hey, look, we're gonna go down. We're gonna come down one more time. Create support right here. If we have that good news for investors, not for the economy, um, the market is gonna take that in and do the whole Fed thing. It's gonna put interest rate now because of this. Even though the Fed said they weren't gonna do it, they weren't gonna cut interest rate in the future. But they did mention that if we did have that news, that they may have to do that. So since we had that good data, bad data, how the fuck you want to see it? Investors were like, "Fuck yeah, here's our savior. Here's our savior. We're gonna go back up." And that was your buying opportunity. That was a real one. And after that, the market played out. And bam, we're back at it again, baby. Okay. And then another thing that I noticed, so we did that fake out that I mentioned on December. You can see right here in the wick. That's this area right here, most likely to see. Yeah, this area right here. On top of that, as I'm watching it, I was like, oh, we have I don't know what you call it, but we have a squeeze pattern. I'm gonna show you my crap, my bullshit, but you're gonna see the I'm gonna point out to the trend line. Focus on the trend line. Ignore all the other lines, all the other bullshit you're gonna see right now. Let me close this shit. So there's a weekly trend line right here. It starts from right here, connects right here, connects right here, stretches out. Let me go to weekly. Yeah. So it starts right here, connects right here, stretch it out, and notice how you know, notice how it connects with that weekly trend line perfectly right here. So seeing that would have also confirmed that that was your buying zone, your bottom. See it right here? It might have been wrote right here, bullish above this area. And the reason why I wrote that is because of the resistance that's underneath it. I know if it would have broken this, it would have been like this right here. That's why when the market was going down, I was like, holy shit, we need to close above here to still have that potential bullishness. The fact that it actually went above the next day, I was like, oh, okay. And then confirming the trend line, and then also confirming, I believe at that time, the daily was right here, but you can see the daily Fibonacci has changed to this area right here. So what I normally do is come right here to this is my daily Fibonacci, close it. This is the new one. This is where the normally the 12-hour candle's at. You can see right here, right there. But since the market moved, it's now telling me there's a harder 50% Fibonacci right here. And we're going on to the 8-hour candle, same area, 4 candle right here. This is 50 Fibonacci, and it's 4 candles, so it's red. Okay. So be green. For a 2-hour candle. Alright, so another thing is this is still bullish for the market. Um, what you're seeing is again, you're seeing cautious with the market, and this is exactly also what the trend line. So what I forgot to mention is, so that squeeze that I'm talking about is right here. You can see the market is. Watch, I'll show you. Oh, right here. So let me take all this crap off. Take the Fibonacci off. So right here, that's the that's that right here. So let me go to the weekly. If you have perfectly that lines up, and then you will go from the top. From the top, make it drop. Reset. Joking, guys. Joking, joking. Right there, bam. Go to your daily. You see that squeezing zone? But if you look at the S&P 500, the S&P 500 is ready to fly. That's why either there's a big move happening with the Fed next week once he talks and whatever data is coming out, and you guys see the S&P hit 7,000 by the end of this year, and then that's gonna make the Nasdaq and your my entry, my indicators also gives you the entries too on every time frame. And it's telling you, so if the S&P does a 77,000, then I can see the Nasdaq shooting 26 again. Or it's telling me that we're gonna start having some sort of pullback, and that you're gonna see the S&P start pulling back either by the time we're at 25,878, and we start having some sort of bad news and touch it again over here, and then sometime in January really break out with the earnings and all that shit. That kind of makes sense too, because if the S&P is already right here, all-time high, region zone, and the Nasdaq is right here, then we're gonna get some sort of feedbacks or pullbacks. And even though the S&P is flying up, as we get start getting pullbacks, you're gonna start seeing it. Let's say it's right here and it goes to 7,000. You're gonna start seeing it. It's gonna be testing now this region as support, and by that time the Nasdaq is gonna be somewhere here, testing this region here. And by the time the S&P thing recovers and goes back up again, then that's really when the Nasdaq is then gonna continue next year and push on up and fly. I could see something like that happening. That's why either this third candle is gonna close inside here still bullish, and then the next year, the next January is gonna complete it going up. Yes, sir. We could have that potentially happen too. Yup. But that's not for way too much, half an hour already. So hopefully they should record me. Hey, won't you? But I'm out pretty much. This is Brian Seacrest, you guys, and I'm out this bitch. Oh shit. Alright. So I'll make another video tomorrow, you guys. Now that I got this thing going. This shit sucks. I'm probably gonna go back try the phone, get some sort of viewer bullshit going on. I wonder how it works. It took me 30 minutes to get one viewer, but on the phone it takes me 7 minutes to get fucking 65, 35, 70, 80. That's crazy how this fucking algorithm works on the computers and cell phones. Anyways, it's Brian Seacrest signing the fuck out.